money is a tool to make an end meet. It's more important to know what the ends are. That was probably the penny dropping moment for me, that I realized that, look, if this is the situation of Indian education space, unless you do something about it, it's not going to change. My son is 10 years old. By the time he's in the job market, half of the job won't exist. So jobs are changing very rapidly, and therefore people need to skill up and upskill, and they will not have an option to go back to college or university. You should not underprice yourself, because then what happens, Ranjani, is that people don't value education. Then they take it. So we have
granted.
Paid programs and free programs. Free programs people don't even value. They always feel ये तो ऐसे ही मिल रहा है. But on a paid program, they put in the effort. And that's a difference that one sees. And if you're providing value, price it as per the value that you're providing for the customer. I have never said congratulations to anybody on raising money. I've always said all the best, wish you the best, because any capital that you raise is a liability, it's not an asset. It sits on the liability side of your balance sheet. So you have to return it. One important thing about a founder journey is more than your skill, more than your talent, more than your storytelling. Just staying at it is far more important than any of the other skills that you have.
Hello and welcome to Mint. You're watching Founder Diaries, where we speak to entrepreneurs about their early days. Today we have with us Mayank Kumar, the co-founder of upGrad's, which is an upskilling platform. Mayank switched to entrepreneurship after spending a few years as an investor. So today we'll speak to him about why he did it and how he did it. Welcome, Mayank.
Thank you, Ranjani, for having me here.
Tell us, something that we ask everyone. are you the first entrepreneur from your family?
Yeah,
and
I'll be the first entrepreneur from the family. Business was not seen as a very good thing to do. And even before that, I remember even investing in stock markets was not seen as a good thing to do. So for me, starting up was like breaking a lot of shackles and starting something grounds up.
Tell us about that thought process. You actually, you had a solid, I would say education at least. IIT graduate. You went to ISB, and then you did a consulting gig, moved on to being an investor. It seems like fairly straightforward. How did entrepreneurship happen?
So I call it's like a lot of bhid chal, because when you're studying in school, because you like math, people say do engineering. So you did engineering because of that. Post-engineering, everybody said that consulting is a good thing, you will learn a bit. So I joined Tata's after IIT, again as a complete bhid chal. And then they say, okay, after 2-3 years, you should do an MBA. I did at ISB, complete bhid chal. Post that, consulting was again a good job to happen. And then around 2013-14, there was a fair bit of craze going on around private equity, VC, because it was emerging. There were not too many unicorns. Large company, but VC investment was becoming big. So I said, if that's the theme of the day, then I might as well become a VC.
But still, I'll stop you here. IIT to itna easy nahi hai to get through.
No,
so it can't be like herd mentality also.
No, it's not. I'm just simplifying things.
Yeah.
But for me, look, I think I grew up in a very small town. So for me, awareness was a big challenge. I did not know enough about what are the various options that as student you have.
Yeah.
So while I can say it was bhid chal, but I still did not know about that IITs existed till about grade 9th or 10th. So for me, when I got into IIT, because from the place where I came from, there was nobody who had gone to IIT before me. So there were not too many precedents to sort of look for. So for me, I call it, my life has been a series of accidents. That this IIT, I got to know, made in there. So it was an accident. Then I went on to getting into my first job, consulting. It did not happen via campus post IIT. So a friend of mine said, here's a job, you want to apply? I applied, and it happened again by accident when I joined Tata's.
What were you doing there?
I was consulting in the manufacturing and sort of mechanical engineering related fields.
Totally different.
So even ISB, I was waitlisted. I would not have made it. It happened again by mistake or by accident. After the day zero, which is the day when you all are supposed to get your best job, etc., I was sort of touted to be the person who will get the best job from campus. But again there, I was waitlisted. My first job also was by accident.
What did you do in ISB? What did you specialize in?
I was specializing in strategy and finance.
Okay.
So education consulting, which is where I joined Parthenon, that happened by accident. Meeting Ronnie was again by accident. So a lot of things have happened by accident. But again, I'm not saying that accidents are good and therefore accidents should happen. But I think one of the key things is that once I got to know, or once I got aware, or once I got into it by accident, I made sure that I made it the love of my life, or at least the area that I want to really intensely focus on. So while I always say I got into education by accident, it actually became like a thing that I really enjoyed doing. And it was a place where your work satisfaction with what skills you bring in was coming in all together. And that's how the journey of sort of upGrad's started early on.
Tell us a little bit about the journey and how you met Ronnie. But before that, tell us a little bit about the journey of upGrad. When did the idea take root?
A lot of people ask me that, look, why are you doing something in education? So to them, my answer is that I don't know anything else. I spent my entire 5 years before upGrad doing just education. I was consulting in the education space. I was helping private equity VC firm invest in education company, and then sort of I advertisement investing in education sector. There were a couple of things, Ranjani, that happened around that time. So one, that was my circle of competence, and I was really passionate about it. I always felt that there were certain things broken because, look, I mean, when I was investing, India is perhaps the largest education industry or sort of business or ecosystem altogether across the globe. But there are not too many great Indian companies that have come up out of in education space. So I was thinking that why am I spending time visiting Brazil, Japan, China, Korea, and looking at education companies, and why can't I do something in India? So
what kind of education companies were you looking at?
Again, higher education, study abroad, skilling, kindergartens, schools, tech-enabled education companies. So it was a whole spectrum of things. But I always used to feel that, look, having done so much work in education, I have to do something back in India. So for me, shifting from consulting to investing was, in consulting, there's not enough skin in the game. In investing, I thought there is some skin in the game, but and then I realized it's not enough skin in the game. And then I realized that, look, maybe doing something of my own is the right thing. And that's how the thought process of upGrad came in. So for me, because I did only education, I had to do only education. But I had certain insights which I truly believed in, which led me to starting off with upGrad. And those insights many a times happen because you are either passionate about a problem or you have spent enough time looking at the problem. So for me, it was a latter and even the sort of former. But a lot of folks are looking at starting up. They always feel that, do I need to know the subject really well? You may not need to know the subject really well as long as you are very passionate about the problem. And so for me, that both of them combined, and that was the reason why upGrad sort of came into existence.
I read your blog post on, visiting that campus. A campus. Tell us about that day. Why were you there? And, what was the thinking?
Yeah, so as an investor, we looked at many companies, and this was one visit for me from my office and home to the university. There was an institution that I had to go because there was a startup that was incubated inside the university. So I went to meet the folks there, and it's a long drive. And I jokingly say that I don't know if you've been to Greater Noida. So if you throw a stone, you hit a university or engineering college. There are too many of them there. So I was going to one of them, and I parked my car. I went inside, and I was just entering the door of the gate, and I asked the guard, look, boss, andar mein kya hai? The guard says, pata nahi, kabhi koi aate hai, koi nahi aate hai, and this thing happens. I go inside the college. The ground floor was empty. On first, second floor, there were some kids, 4 kids studying inside a classroom, and the institute was completely empty. I went in and I saw this is what they're studying. I just had a smirk and I laughed, and I said, look, this is really bad. And I started talking to them. I realized that, some of them, 2 of them, they have all come from that Bihar, UP, Bengal, Chhattisgarh, that belt, and came down to Noida to study in one of the prestigious institutions. Is what parents would have spent money, put up things for mortgage, etc., to send their kids to that education. And I realized that if this is the kind of education that they're getting, I asked them, what are you guys studying here? So they were studying electrical, electronics, engineering. And they said, look, boss, I'm just coming here. I come in the morning, I leave in the afternoon because I have to come here for attendance. But teachers don't come. I again laughed because the guard did not know. The entire institution was empty. There were these kids who were studying and no teachers. And that was probably the penny dropping moment for me that I realized that, look, if this is the situation of Indian education space, unless you do something about it, it's not going to change. And I had, I think we were speaking before this also, I had the privilege of having very good quality subsidized education. So I felt that somebody has invested in me, gave me good education, and education played a very important role in what my life has been over a period of time. And I had done enough time spent on education space. So I felt that, look, if that I had great education, I have spent time in education, I helped investors invest about $1 billion coming into the education sector. If I don't do something about it, who will? And that's where the idea of upGrad got more cemented, because that was one sometimes you have one or two personal incidents that just sort of strike the or light the fire for you, and you say, okay, now this is it, and you need to do something. But that was the germination, or that was the start of the idea that, look, I need to do something. It was always at the back of the mind, but that idea that I want to do something in higher education, I want to do something in which I can change the demographic. I used to have a debate called demographic dividend or demographic disaster as kids. That if we don't do anything, their entire demographic dividend will become a demographic debt or demographic disaster. And therefore, the thought of upGrad became more and more formalized. And then again, few things led to one led to another, and then upGrad started.
Why higher education or upskilling? Like this. You're talking about your experience in Kendriya Vidyalaya. Did you think about building something in schooling?
Never. I mean, schooling? No, not schooling. I'll give you 2-3 reasons. At that time, again, there were no these large Edtech companies that existed out there. A couple of things that I was not very happy with in the school ecosystem. I first of all believe that slightly earlier age, technology can be an enabler. It can only supplement, but it cannot replace. As you grow older, and we become a working adult, technology-led education can become the core education and not supplementary. Because for people like you and me, we don't have an option but to study online, right? So that was the thought process at which we said, okay, because there's a more need of physical engagement as you are younger, and as you grow older, online becomes more relevant. So I wanted to be in the online space, and therefore that ecosystem. That was the number one reason. Number two, the customer and the consumers are the same people. While in school, you are solving for the kids, but the payers are parents or school teachers or principals, so on and so forth. So therefore, there's different. You're solving for needs of different people, but for the user. So you solve for the need of the principal, the school owner, the parent, the class teacher, the tuition teacher, but not for the child. And I felt that, look, if the consumer and customers are different, it's very difficult for me to build a strong sort of product. In this case, consumer and customers are the same. And then the last couple of things that I saw in this space was, look, I mean, when I graduated, there was no role as product manager, digital marketing manager, social media manager. These all roles came into existence now. I also know that my son is 10 years old. By the time he's in the job market, half of the job won't exist. So jobs are changing very rapidly, and therefore people need to skill up and upskill, and they will not have an option to go back to college or university. And therefore, this macro thematic was also interesting to me. And the last one that actually touched, I mean, the quality of education example that I gave you about this institution. I also feel, I mean, you won't believe this thing that, look, for every 100 kids who should be in school today, about 95 to 100 of them are in school in some form or other. I mean, we had many schemes that led to higher participation in school. But for every 100 people who should be in universities and colleges, only 30 of them are there.
Why?
People drop out. India has an access problem. India has a huge access problem because of societal pressure. Kids have to start earning from the young age. We just do not get into education, higher education space.
Also, it's expensive.
It is expensive. But again, look, I mean, expensive is a relative term for different folks. But if you go to a DU, it's not that expensive. If you go to a government institution, it's not that expensive. But the amount of infra that we need is humongous. We need to have about 40 million people 35 million people are currently studying, or 150 million should be there, and 40 million are currently in the higher education space. 150 million seats are very difficult to build. It is a significant investment. 15 crore seats for higher education. It's very difficult to sort of build. India has to do the same leapfrogging that happened from pager to or landline phone to mobile phones. India has to move to online much faster. So access, quality, and everything was together were making us go more towards upskilling and higher education, because we felt that there's a problem and there are advantages of this sector because it's more amenable to online. Customer, consumer are the same, and that's why I chose that sector to sort of build something out.
A lot of threads there, and I want to pick at some of them if possible. You mentioned, far back in 2015, you thought of going online. That was still a fairly nascent thing to build there. And the other interesting thing is, I remember investors saying that nobody really wants to invest in education because of the regulatory reasons. A lot of schools are set up in trust format, even universities, education. How did you try to navigate that ecosystem, like thinking online? Like, I understand the reasons why you did online, but at that point, opting to do everything online instead of a physical sort of a setup, and opting to set up in education where it was fairly regulatory. I mean, it was like a chokehold that the regulators.
Fair point. So I think first of all, everybody asks that question: why do you want to start in education online? And I think early days we took a lot of counterintuitive call. We said we'll teach purely online. Our first program was about 50,000-60,000 rupees, which is expensive. In fact, our first successful program, again a partnered program, was at 2 lakh rupees, the second program, which was again quite expensive. So when we charged and priced that, everybody said, you are stupid, you are doing everything online. Then you are charging so much when everything is available for free. And then we said you have to work for about 8 to 15 hours every week for a period of 40 weeks or 50 weeks. Everybody said that, look, I mean, it's not going to work out. And online at that time, there was no 5G, 4G was sort of coming up, etc. No, so look, I personally believe that at that point of time, technology will outpace us. I'm a firm believer that technological innovation always outpaces whatever that you can think of. And look, from 2015 to now, you can ask a question, you get an answer immediately. So I believe that over a period of time, we will have that 4G, 5G, because a lot of investments had already gone into the space. And actually, it played out well. I mean, our first product, I remember, you could watch it at different bandwidth. You can watch it at edge network or an offline sort of modality, because people did not have enough sort of good bandwidth. Today, I don't need that. But we did some technological innovation to ensure that people can watch offline, people can take the test, etc. But it was a belief that technology will outpace us. To your second question, look, I mean, given an education sector, I knew what was regulatory-wise a challenge and what was not a challenge. And therefore, I chose a space. Skilling overall as a space has not been in the regulatory ambit as much. And we're doing largely working adults and working professionals. Slowly, sort of, we have gone beyond it.
No, but I meant also it's a mindset thing. Like, you know, people think that like, for instance, KV is pretty subsidized. And IITs are also fairly subsidized. And, you know, building a for-profit, one of the criticisms that Edtech faces now is that, you know, it's very predatory, that it's a lot of mis-selling, there's a lot of... Given that context, as a founder, what was your thinking?
So for us, we're very clear that, look, we are not going after this. So predatory comes up fairly in a big way when the customer and consumers are different. If your customer consumers are same, then you're going and talking to the person, showing them the value, and therefore sort of letting the person take up a product. So we believe that in this space, it's not what sort of a whole lot of people talk about. You can, I'll tweak the question and maybe ask this question differently, that look, if you were from a subsidized education, why did you charge 2 lakh rupees for a program in data science? I believe that if you provide a certain amount of value, that value should be justified with the outcome that one is getting. My thought process was data science was a big area which was coming up, and people who are coming to learn from us were coming at about 5-6 lakh of salary levels. And we knew that after doing this course, they can end up getting a 20, 30, 40% jump or 50% jump from the salary structure. So if they're coming with 6 lakh, they will end up at 9 lakhs. They will have a 3 lakh upside. And for the 3 lakh upside, charging a 2 lakh rupees is absolutely justifiable. So I come from a mindset that if you are providing value, then you should not underprice yourself. If there's value to what you are doing, price it in the right way, make financing accessible, make payment accessible, solve for those problems rather than making just education accessible. Because for me, it was very important. I want to build something at scale, something that will give impact, something that is self-sustaining. And therefore, all of that is where I felt you should not underprice yourself, because then what happens, Ronnie, is that people don't value education. Then they take it. So we have paid programs and free programs. Free programs, people don't even value. They always feel ये तो ऐसे ही मिल रहा है. But on a paid program, they put in the effort. And that's a difference that one sees. And if you're providing value, price it as per the value that you're providing for the customer.
Right. I want to go back to, you know, how you started, your personal journey as a founder. Tell us about meeting Ronnie and, you know, the idea for upGrad. How did that play out?
So again, as I said, series of accidents.
Yeah.
So meeting Ronnie was also an accident. My ex-colleague that I used to work with is Ronnie's neighbor. So he said, look, I mean, now you're doing investing, why don't you meet Ronnie? Because he's looking at doing something in the education and health space. So my first meeting was to share my knowledge about the education sector with him. So after a meeting, we just went sideways. I was doing what I was doing. Ronnie was just sort of doing perhaps his more research. And then one day he calls me up saying that, look, I want to do something. Would you be interested in launching something of your own? I said, no. And I kept the phone down.
Okay.
And then I thought about it. And I mean, at the back of the mind, there was always that conversation that, look, let's do something. Let's figure out doing something. And those incidents that I spoke about were definitely playing. And that's where I just sort of said, okay, let's just explore and let's see what exactly is out there. I think Ronnie was very clear that, look, let's start yesterday. And I was like, well, let's just first figure out what we want to start, how we want to start, what will be the modalities, etc. So we spent another close to about 3 to 6 months in just discussing. I used to sort of spend some time with him, understand, talk about the models, why will this work, why will this not work, build a sort of plan, what's the approach, etc. And that's where we came together and said, look, this is what we would like to build. So the meeting of Ronnie was accident, and then multiple things happened, and then we said, okay, let's launch something together. And then we got Falgun and Ravi, 2 other co-founders, to come together and build this out along with us.
How long did it take you from that initial meeting to...
From the first meeting to the second meeting, maybe a couple of months, which was a knowledge meeting to popping up the question and saying that, look, would you do something together? From that point of time till starting of upGrad's, close to about 3 to 6 months roughly.
So you were basically building the base at that point.
Yeah, I was just sort of working on what should be the idea, how should you flesh it out, what should you sort of work around, what are things that you need to sort of get right for launching. So it took us that time.
What did you need to get right?
Getting the co-founders, identifying who else should we work with, what are the sort of business implication, financial implication, what kind of investment will it go, what kind of product do we want to build, which sector do we want to sort of touch upon, etc. So I think those conversations, and also, look, it's very important that Ronnie and I had not worked together earlier. And when you are coming as co-founders, you also need to build a chemistry to know each other well. So you can call it a courting period where you're getting to know each other better. What does he bring to the table? What do I bring to the table? What does Ravi, Falgun, they all bring to the table? So it was also a culmination of putting the team together, putting the founding team, and starting up with the journey at the early days. So that's how the entire sort of conversations picked up and sort of started.
Again, I'll kind of stop you there. Multiple threads. What is the most important criteria you think you need to identify in your co-founder? Because there are 4 of you.
Yeah.
And
see, I think, look, one critical one is that, which is very important, and people sometimes underestimate that things will turn very bad in various conversations. It will be tough. You will have like bad days and
very bad days.
And very bad days. And then around that time, how comfortable are you to sitting with these set of people and thrashing things out? You need to have that comfort. You need to have that sort of understanding that, look, even if it is bad, you can still sit together and resolve it. Because sometimes you don't have that chemistry. So chemistry, for that matter, matters a lot more than anything else. I can say in a more sort of objective manner that you always look for complementary skills. I brought in the understanding of education, the strategic intent, and how to build this out. Ronnie knew how to build a large business at scale, brand, and how to sort of create this. Falgun knew sort of how to manage, drive sales, manage a large set of people, and Ravi understood product and tech. So I think all of us brought complementary skill set, but all those are not as important as the ability to come together and discuss a few things out and solve for it. And in these conversations, whose say is going to stay at the end of the day.
How did you all decide that?
No, I think we were very clear that for a lot of conversation, day-to-day operation, everything else, I would be the person who will take the calls and sort of run the operations. And for specific aspects of the business, each individual co-founder had that kind of sort of understanding that, look, on product and tech, Ravi will take a call. On business and sales, Falgun will take a call. If you're going and doing a branding campaign, sort of Ronnie will definitely like to have an input. But when everything comes head to head, then my call will prevail at that point of time. So I think we had an understanding around that. And I think that is very important to see. There are 2 reasons why co-founders will drift apart. either you are not aligned on the strategic values or the strategic sort of vision, or there's an ethical, or you don't align on work ethics. If these two misalignment happen, it gets very difficult for people to sort of work together. For example, I mean, I may want to fire somebody by shouting at that person, saying, "Chalo jao baar." The other co-founder may say, "Okay, let's just do it respectfully and do it properly." Now, if that misalignment starts coming in, it's very difficult to work with co-founders in that. What's your work ethics? What do you like? Somebody comes and says, "Isko 2 lakh rupees dete, kaam ho jayega." If you are not of that character, you will not do it. And therefore, you drift apart. Then on strategic vision, if the direction is something that you're not aligning on, look, should I be doing free? Should I be doing paid? Should I be making profitable? Should I be burn? I think those are the key conversations that you need to have on an ongoing basis with the co-founder to come on the same page with.
I would venture that, perhaps money is also a big reason. Like
not for co-founders to be together. I mean, it could have been that, look, none of us had, let's say, capital, but still people will come together. I mean, a lot of co-founders don't have that money backing, etc., etc. They come together, build something, or they can build it sort of bootstrap. I personally believe that money is perhaps one of the most, it's a very important parameter of launching and starting up, but it sometimes gets a lot more undue coverage and spotlight and limelight than it should. Because money is a tool to make an end meet. It's more important to know what the ends are, how you're going to sort of get to there. If money comes, does not come, that's a function of whether you take debt or you take equity or you sort of build something out in different ways. Because sometimes people, when you raise a fund, there's a tendency in the ecosystem to say congratulations. I have never said congratulations to anybody on raising money. I've always said all the best, wish you the best, because any capital that you raise is a liability, it's not an asset. It sits on the liability side of your balance sheet.
Talk to us about the first pitches that you made to investors. Like, how did you establish that?
So our journey was slightly different. So we never went ahead, we never raised funds externally for the first 5-6 years. We were just sort of founder funded. So we never went out and raised capital. Our first fundraise happened during COVID time when Temasek came in into a cap table. But initial days also, let's see, if I have to, not for fundraise, but if I have to go and talk to some folks, they will find it difficult to believe how big the market could be.
Like VCs, you mean?
VCs, etc. So I think one of the questions that always used to come, what is the TAM? How big is the market? And I used to say, look, the market is very big. But projecting it and telling them, and that was one area that they've never understood, that why will people upskill? What will drive them to upskill? But I think the belief that skills are changing and constantly people will have to come back and learn something was there with us. So despite getting those questions, I personally never questioned the fact as how big is the TAM. Today, nobody asked that question. And
but at that point, what did you tell them?
I mean, I can give them 5-6 data points and say, "Ye dekho, either LinkedIn is this much, this is this much, therefore this is this big." But again, those are, see, when you're building a new market, one of the most important things that you need to have is the belief. The belief that what you're doing is absolutely right, and therefore they are going to be takers. And we believed in that, and that's how we sort of always sort of progress. So even when people would come and ask us for time, I'll share some data points. They will take it. But then I realized it's not a factual question that they're asking. It's they need to understand and they need to perhaps feel the market. Because all the investors that you are talking to are not the consumer of this product. All the investors are not going to buy this product. They're buying some other product, etc. So for them to relate that, look, there is a section of society that wants this product, took us some time. And I think we stayed at it. And one important thing about the founder journey is more than your skill, more than your talent, more than your storytelling, just staying at it is far more important than any of the other skills that you have. You just stay at it and continue doing what you're doing. Because the more you believe in that idea, in the product and the business, you will just stay at it. And if you stay at it, you will see the results.
So you never thought of giving up?
No, every day. You think about giving up every day. Giving up in the sense that you always feel frustrated. But not a single day I felt like giving up. I mean, I was talking to somebody about 3-4 months back that, look, you usually have this tendency in schools or colleges, right? I mean, if one day you feel like not attending a class, you say, okay, today I'll bunk and I will attend the next one. The first day it happens, it's a downward hill. Like you stop attending those classes, your attendance are very low because you don't enjoy going to that class. And it's been what now, coming to close to 10 years. Not a single day that has happened to me.
That you've bunked work.
Bunked, or I felt not attending. Yeah, I bunked. Yeah, you're right. Bunked work. I mean, my wife has never seen, okay, one day I got up, today I'm not going to office. It has never happened. And that thing is because you love the problem and you love what you're solving for. And more importantly than that, it's the fact that as you start scaling up, there are a lot of people who come together. I mean, upGrad has about 4,000 odd sort of folks working with us. And then you realize that, look, they're all coming to the office in the hope that you as an individual and your team are taking the right decisions. So at that point in time, you cannot bunk. And bunking is not an option. But it has to come with a belief, it has to come with a passion, it has to come with the fact that you really love the problem that you're solving for. And that's why having that passion at the starting point on that particular idea, on that particular business is very important for you to sort of launch something.
You know, if we can touch upon certain personal philosophies, like how would you, when would you call upGrad a success?
See, I mean, right now I think there's still a journey for us to be done. Look, for me, success is when our learners are finding outcomes. And if the learners are finding results and the learners are finding better jobs, better increments, better placements, I think a large part of our success comes from there. And that's one of the most critical stakeholders for us. The second critical stakeholder for us would be our employees. And if the employees are feeling that on a day-on-day basis, look, I'm here, I'm making an impact, I'm making a difference. Look, the current generation who's coming into job workforce come from families who are far more stable. And therefore, this generation has a lot more ability to do something beyond work also. They are not reliant on just job as the source of income. And therefore, they have that ability to trying out various things, and thus they need to find meaning in what they're doing. So for employees, if they can find meaning in what they're doing, if they're seeing the impact of the job, if they are learning, if they're growing, that's the second form of success. And the third form of success for us, the third stakeholders are our university partners and corporate partners who need to see that, okay, working with upGrad, I'm getting some outcomes at the end of the day. And the final stakeholders happen to be the shareholders.
Correct, yeah.
And look, for many entrepreneurs, IPO is a success. But for us, IPO is just one station in the long train journey. That as part of various stations of first funding, second funding, and then IPO is one other part in which you bring in some public investors or sort of individual retail investor coming on the journey. But the journey is a much more important journey for the outcome for the learners, our employees, and our sort of university and corporate partners who should see value with what we are doing. If they see value, shareholders' value will be taken care of.
Where do you have a timeline in mind for an IPO?
I think it's still about 2 years away. There's still a fair bit of work, but that work is started and has started. We believe that we are a good size and scale for us to look at it seriously, but it is a lot of hard work because so till you're a private listed company, it is different. The moment you become public listed, then you have a lot more sort of systems to be in place, a lot of sort of ability to sort of talk to retail investors in a very meaningful manner. So we believe that's about 8 quarters away from it.
And also access to a diversified base of capital.
Absolutely, yeah.
What do you think will be harder, private capital or
today?
IPO?
Look, I think if you again, practically speaking, if you ask and you talk to a lot of investors, India is a very good spot right now. Amongst all emerging markets and all destination of capital, India attracts perhaps one of the best sort of capital coming into the ecosystem. So for an entrepreneur who's ready to an IPO today, I would say an IPO is a much better option. A public capital is a much better option than a private raise. But if you do not have everything ready to an IPO, you have private capital available. But if you see the current sort of stories, a lot many more founders are accessing public capital and public sort of listing versus the private capital, largely because I think our country is in a very unique spot. We have a strong growth, strong GDP, and a lot of things working in our favor. And therefore, for a lot of global capital pool, India becomes the best capital pool to come in. And in that, public markets become far more attractive, and therefore public market becomes far more attractive with all those ecosystem coming together.
Personally, do you think it's important to have like an MBA?
No. I think education, you definitely need to have some kind of circle of competence, some kind of competence available, but I don't see that MBA is important. Look, MBA does add value. I'm not sort of putting it under the carpet and brushing it under the carpet saying that MBA does not add value. It gives a very holistic learning. It gives you a very short approach towards understanding business in a very quick time frame. I think those are the advantages. But is it a must require skill? No, I don't think it's a must require education, business and education credential. And you can check out the founder group. I mean, many founders do not have an MBA. Amongst our founder group, 3 of them don't have an MBA. Ronnie does not have an MBA. Ravi does not have an MBA. Falgun does not have an MBA.
Interesting. We've had this conversation for quite some time. If we can summarize, what are the 3 traits that you think founders should have or would be desirable in entrepreneurs?
No, I would say that I think one thing is very clear, that whatever that you're doing, have passion what you're going to build out. And the reason I say this is because you will have more bad days than good days. And in the bad days, that belief is going to take you through. The belief that if not me, then who? The belief that it's an important problem to solve. The belief that there's a much bigger impact that I'm creating than just sort of running a business. And I think that belief, that passion has to be there for one to sort of build this out. I think 2, I would say, whatever that you're doing and whatever that you're building, be passionate, but don't get emotional about it. Many times founders make a mistake of getting too emotional about a particular problem. So you can be passionate, but if you get emotional, it's dangerous for the business. And I think the last one that I really love and I continue to follow this diligently is that no matter what happens, you just have to show up. Because for you, what matters the most is just showing up daily and showing up every day. Being at it for a consistent long period of time gives a far bigger return than being at it for a very shorter period of time. That consistency of being at it is very, very important for any founder coming in.
We'll end it there. Thank you so much, Mayank.
Thanks a lot.
It was
Thank
a
you
pleasure.
for having me. Thank you.